Hey everyone, I'm Charting Man Dan, trader and technical analyst with the Chart Guys. In this video, we're going to talk about the broader market and where we see big money shifting around and rotating. Certainly weakness in the NASDAQ and semiconductors, but persistent strength elsewhere. Is it enough to offset this drop in the Magnificent Seven? Let's look at stuff. All right, so the S&P 500 had a pretty solid pullback. It is still a daily uptrend, and I'm watching the futures chart for this uptrend support line on the 4-hour time frame. Reason being, we've been bouncing off it a whole bunch, including today. So the big question that I have for the next couple of days, because clearly money is leaving big tech and going into our laggard sectors in IWM, and I'll show you that more in depth in just a moment. But the big question that I have for the rest of the week is, do we see the other sectors that are holding things up, financial, healthcare, laggard sectors, IWM, and the others we'll look at in just a moment, do they roll over and join the NASDAQ and semiconductor bears, or do the NASDAQ and semiconductors bounce, some of them, many of them hitting 4-hour oversold conditions, and the broader market stays just fine for the bulls? That's the big question. The weekly consolidation has started on the NASDAQ. It has not started on the S&P 500 just yet. So burden still on bears there, and what they really want to do is confirm a 4-hour downtrend on the futures chart and break this uptrending support line to be shaping up, following along, and joining weekly consolidation. And for SPY, that short-term daily support level is still holding, and that's at 453.34. Short-term line in the sand. So NASDAQ. So this is our futures 4-hour rising wedge from the end of last week. It's following through a bit. Nice big drop today. There's been an opportunity for NASDAQ and semiconductor bears. And so one thing I want to highlight is the Magnificent Seven, because everybody's talking about how the Magnificent Seven is the reason the market is going up. And in large part, it is. It's definitely leading the way up. But in the last 8 days, from the high of these names to their low, NVDA dropped over 10, Google, Meta, Tesla, 8%, Amazon, 4.4%, Apple, 2.8%. SPY is only down 1.2%. This is showing us that rotation is going on. If you told me that these names were going to be dropping this much 2 weeks ago, if you said these names are going to come off their high this much, but SPY is going to give us the second highest close in many, many months, second highest close in like 18 months. With these major leader names down that much, I would say that's best case scenario. The broader market bulls, the S&P 500, could not have asked for anything better while these names are dropping that much to be holding on this well. So with the weakness, the fear, if we're going to see broader market fear, it has to come from somewhere else. And so what I'm looking for here in the short term, I've been swinging Netflix short recently. I've been scaling out. So scaled out more today. I'm going to be all out of this trade tomorrow. The 4-hour RSI is getting crushed. I'm looking for a 4-hour bounce, and then I'll scout a daily lower high from there. Maybe re-enter. But a lot of these names are looking for 4-hour oversold bounces. So Netflix is crushed here. Google has been leading the way down. It's trying to get a 4-hour oversold bounce going. We'll see what tomorrow brings. We're trying to shape up hourly trend changes into the close. So can we get the daily bounce going from 4-hour oversold conditions? We also have to remember, weekly higher lows are the most likely scenario on a lot of these NASDAQ-related names. Does 4-hour oversold mark a weekly higher low? Only if these names are still strong longer term. So looking for some temporary bounces. And again, do we see these bounces take place tomorrow? And do we see the financial sector start pulling back with a bit of inverse tag team rotation action? NVDA, we'll go semiconductors first. So again, SMH is a daily downtrend in weekly consolidation. We know a weekly higher low is the most likely scenario. There's no major red flags on the weekly consolidation at this point. What does this look like? What does this look like? Well, I'll tell you. Look at the monthly. A little bit different. Straight up, 3 candles, EMA 12, bull flag confirmed. So can the weekly hold EMA 12 and stay healthy or not? We'll see. But it is a daily downtrend. Trying to confirm, just confirm the hourly uptrend into the close. Again, NVDA, 4-hour oversold bounce attempt. Still all bears in the short term, but keeping an eye out for a daily bounce in the names that have led the way down. Another one being Meta. So Meta, bullish reversal daily candle. I longed Meta today, and I did so. I guess I should have pulled up my post. You'll have to trust me. I was talking about it in the chat room. So as I'm scaling out my Netflix short, I'm looking at Meta and saying, okay, here's a clear 5-minute tightening range. And there was relative strength in the sense that, look at this bounce from 950 to 1005. What was QQQ doing at 950 to 1005? It was bouncing as well. Look at this follow through. NASDAQ, huge bear follow through, very convincing. Meta didn't hit a low. That tells me relative strength. Meta has been leading the way down for days, and that is now showing me that's shifting. So I played off this 315 support, just a standard equilibrium. This was a day trade. And I take some partial profit, I stick my stop break even in the mid 314s, and I let it play out. And then as it plays out, I'm starting to see, well, these could be 4-hour oversold bounces that get followed through into tomorrow. And so I'm going to give this a chance to play out. So I now have a meta swing position, was not intending to, but the price is currently over 1% above my break even. So I like the risk reward to give it a chance. And I will sell, anticipating a daily lower high, probably. Best case scenario, again, it would be a weekly higher low, but I'm not going to hold my breath for that. But I could just recognize, again, that little 5-minute, that's why I'm staring at these ETFs when I'm staring at individual names, because that little glimpse showed us the relative weakness that has been massive for the last 4 days. Here's Meta divided by QQQ. Massive relative weakness the last 3 days, including the open, shifting into relative strength from morning into the afternoon. We'll see if it plays out. Back to semiconductors. So ARM, still trying for the daily bull flag. It's less probable after the big red day. But essentially, we're range bound here where bulls are longing under $61 and getting really nice bounces, and bears are shorting 64s and getting really nice pullbacks. And we're just waiting for one of these levels to break. And so we're going to look for a lower high compared to the 64s if we get any bounce follow through tomorrow, and watching for this range to continue tightening up, potentially for another day or two, but looking for this to break this week. And if it breaks bear, we zoom out and look for an eventual weekly higher low, but that will essentially tell me, be patient, because this one can tighten up for a while. Tesla, daily inside bar, relative strength on the morning shifted to relative weakness. Why? Because we were rejected from the high of Friday. So here was the relative strength all morning, and then it stopped dead in its tracks because there was resistance in the 239s from Friday. The number one reason relative strength or weakness will shift intraday is when an individual name has a key level that it holds as support or rejects from as resistance. What I'm watching for on Tesla is the possibility of a head and shoulders. There's a very clear base of support, 231 to 232. If this inside bar breaks bull tomorrow, I'm keeping an eye out for a daily lower high, anything under 250, 275. And then can we confirm the daily downtrend? Why am I looking for a head and shoulders? Because a weekly lower high is the most likely scenario. It's a weekly stair-step bounce the last month. And I'm watching to see, does that weekly lower high get set into weekly consolidation? So maybe we get a daily bounce in the NASDAQ and in some of these 4-hour oversold bounce attempts, and maybe it just leads to a daily lower high and bears keep control. That would likely need to be the setup for the daily head and shoulders to take shape on Tesla. But it's something I'm watching for later this week. So again, I got bull trades, I got bear trades. I'm just watching both. I'm open to both. I know I'm starting to sound like a perma bull when I keep talking about rotation. This is healthy. There are no red flags. But I mean, just looking at IWM, beast mode the last 2 days, and look at IWM divided by QQQ. This is the most convincing bottom in this ratio. Again, this is showing where's money going. This is my where's money going chart comparing these two sectors. Money was clearly going to QQQ for a year, the entire year. And now it is shifting a bit. So where's the shift? I mean, just treat it like a trend. Let's condense it down, 2-day time frame. This is the first uptrend on the 2-day time frame in 4 months or so. And look at the monthly. It's a monthly stair-step drop that has now broken bull. We have put in a temporary bottom into the relative weakness of IWM compared to QQQ. And that's because QQQ is dropping and IWM is bouncing. That is showing us where money is going. I just got something in my eye. It's a baddie. Pause. All right, so I don't want to fight the market. I don't want to fight big money. I want to ride the coattails of big money. And this chart is showing us that money is shifting from tech and semiconductors into IWM and laggard sectors. So again, a few weeks ago, I talked about this reminds me of the summer. In the summer, the NASDAQ and semiconductors led the way up into May. And then right around mid-May, we started to get confidence, scout the laggards, and then IWM, the laggards took over. Let's go back and look at that on the chart. How significant was that here? So that was here. Essentially, it was really just sideways. It was the IWM starting to keep up with QQQ. But this is IWM leading. This is different. And so, again, IWM, really strong 2 days. We're going to watch the hourly uptrend, the daily uptrend. 190.96 is the next major resistance level. Bigger picture, we got a whole bunch of resistance in the 197s. Remember that triple top? We rolled over, and then we held a triple bottom. So now the question is IWM going to get boring if we fail 197 and then pull back and tighten up for another 2 months, 3 months, maybe? But the bulls have momentum in the short term. And again, the other laggard sectors that we were looking to, Jets. Jets had a headline with HA being bought by Alaskan Airlines. It's been putting in a bottom. Look at the 3-month equilibrium on Jets. A perfect hold. Broke it by a few pennies, but 3-month equilibrium following through off support. Watch how this breaks. This has been forming for almost 3 years. How this pattern breaks is going to have significant long-term implications in the airline sector. So that was a laggard. The biotech sector has been a laggard. It's in breakout mode the last few days. ARKK has been our strongest laggard sector. It's seeing continuation. Again, it's just money is rotating. If you are bearish, the market, again, bears have had a great NVDA, a great Google, a great Meta, a great Netflix. There's bear opportunity in the market. But if you're talking fear in the market, weakness in the market, you've got to see the major sectors dropping together and not this rotation out of the strongest names into the weakest names. The breadth is increasing in the market. And everybody that's saying it's only the Magnificent Seven holding things up, the last 2 weeks is showing us that is shifting. And so if you're a bull concerned about it's only the Magnificent Seven, the last week and a half are alleviating your concerns a good bit. And to go along with growth, cannabis names, the psychedelic sector. So in the weekend video to TheChartGuys members, highlighted TLRY as a top watch this week. It's an inverse head and shoulders. We are in the mode to be scouting bullish laggard setups as long as the broader market, the S&P 500, is not giving us red flags. So TLRY breaks 191 and gets followed through. Junker penny stock, CGC, big follow through. And so we watched that happen live while I was live streaming this morning and said, watch MSOS. We're getting watch MSOS to be the laggard. It broke 7. It went up 5%, 7% instantly on the break of 7 resistance that's just been keeping a lid on things. And MNMD, that psychedelic penny stock name that we talked about going long in last week, it's just been, now it looks like a temporary top, but just 20% plus follow through. These are the weakest sectors in the entire market. And one reason I didn't fully believe the broader market bears today, again, I believed the NASDAQ bears. They were showing follow through. But I didn't believe the broader market bears because these names were at their high of the day while the NASDAQ was dumping. That's very unusual. Anybody that watches the cannabis sector knows that if the NASDAQ's dumping, cannabis is dumping harder. And it's just different. Things are shifting. Money is rotating. XLV daily uptrend continues to be our guide. Bull break over weekly downtrend resistance of 190-192. So again, another thing, if the NASDAQ's dropping, clearly that's going to be weighing on things. But if our other major sectors are not dropping with it, we're not going to see fear. And XLF, all bulls still. Broke the high of Friday with no follow through, and now we're tightening up. And I did grab a little bit of short exposure in XLF, but essentially what I want to see is NASDAQ names get some 4-hour oversold bounce into daily lower highs. While that happens, probably maybe tomorrow, looking for XLF to pull back into daily consolidation to have that rotation taking place. Again, the next time we see XLF, XLV, QQQ at the low of the day at the same time, flashing red lights are going to be going off in our brains. But if that is not happening, there is some form of rotation going on. The dollar has its weekly bounce underway. If you are bullish markets, commodities, or crypto, you really want to see the dollar reject on the back test of these EMAs to try and be a weekly bear flag. If you are bearish, the things that I just mentioned, you want to see a 50% plus retracement on this weekly bounce to shape up a potential monthly higher low, which is absolutely on the table as a possibility. If you're bearish, anything crypto, commodities, or stocks, you are banking on a monthly uptrend confirming in the dollar. That is a requirement, in my opinion. Metals getting all kinds of wild. So gold to open futures last night had an unprecedented move up. A 3% instant move up. That's a ton for gold. Blue sky breakout, 3%. And we then gave it back, all back, throughout the day. That's a red flag. You do not want to break a triple top of all-time highs straight into a loss of that level back within range. So I have been pounding the table about long metals and miners. This is my first, wait a second, we got to be cautious now. And the bears will need to confirm a 4-hour downtrend with tons of space for that lower high as a result of the next bounce. But cautious because there are some longer term red flags. I mean, this could be a long-term rising wedge because of that bull break zero follow through. So this now has me considering exiting some metals positions. And I'm going to wait a little bit and let it play out a little bit, but this is not what bulls want to see. Silver, daily consolidation, trying to hold EMA 12. Again, no major red flags. It's never a good thing to give back, the last 4 bull days. It is a daily uptrend. Same thing, got to confirm the 4-hour downtrend for the bears as a result of the next bounce, but rejecting from the many month highs, multiple year highs, up in the 26s. So from coasting for the bulls to very quickly saying these are red flags. Let's see if these red flags follow through. Miners, again, GDXJ, still a daily uptrend. Definitely no monster red flags on the miners, but some red flags in the metals. Again, that just means pay extra attention. This might be trouble for bulls. Oil, that's not right. Oil dropped down and confirmed the weekly bear flag, breaking 72.37 support. Nope, no it didn't. We held just barely. We're on the verge, but bulls are defending support at the moment. 72.37 must break to confirm the weekly bear flag if we're going to continue dropping on oil. Natural gas, a bit of bear follow through to start the week, trying to get a bounce going. Who cares? We'll see. Again, it's just for healthy rotation. I'm not trying to be a perma bull, but every time I see some weakness and then I look around at the market, so, this isn't what the bears want. This isn't what they're looking for. That can change in a day, and I can change in a day. But until that happens, the name of the game is rotation. I hope you're well, had a great weekend. Let's learn about fire cider and do good things. All right, we're going to make some fire cider, starting off with the apple cider vinegar. We got some horseradish, garlic, lemon, jalapeno, ginger, thyme, dill, rosemary, onion, turmeric, black pepper to absorb the turmeric. Let's see how it goes. So chopped everything up. Next comes the apple cider vinegar, one of the benefits of fire cider in the winter time when cold and flu season's going on. I like to just take a shot of it every day, every other day, and it's filled with a bunch of beneficial things, vitamin C and anti-inflammatory, garlic and turmeric and ginger and all that. And it's definitely, you gotta take a shot of it because you can see the ingredients. It's pretty intense, but something that I've learned to enjoy over the last bunch of years. And there we go. The benefits of apple cider vinegar. It's living, it's unpasteurized, and it's got a mother, similar to how kombucha is created, but it helps with gut bacteria and balance. And if there's one thing that Western medicine falls short in, it is gut health. It's extremely important. And you need your prebiotics and your probiotics, chicory root, garlic, things like that. Help keep, it's the same thing as soil. Soil has all these little microorganisms that are beneficial, and you need living soil just like you have a ton of bacteria in your gut. And you may have heard, if you take antibiotics, which I try and avoid at all costs unless it's extremely necessary, and then it's a miracle of science and Western medicine, but antibiotics can destroy your gut biome. And I know people that, had a tooth infection and had to go on antibiotics, and then for decades their digestive system is completely thrown out of whack. So treat your gut well.